everybody. Today, of course, is Thursday, December 21st, 2017, our regularly scheduled webinar. So we are just a few days before Christmas. Um, Next week, probably relatively slow trading. The market just continues to kind of tick up and do its thing. We'll look at all the levels here. We're going to start out again, as usual, with the monthly. Now, here's what's really interesting to me now. On the monthly chart, the S&P is roughly 2,500. So we are now about 180 points above that upper band. So this market continues to exude just unbelievable strength. So again, we really want to be cognizant of whether or not the market will fall back below the upper band. And again, I think what's really encouraging about this is a couple of things. Number one is the fact that if the market does pull back, I do think ultimately we will obviously retest that upper band again. So I think that's going to ultimately create an opportunity. Obviously, the question is when. Because you look at the Dow now, the Dow is 3,000 points above the upper band. And quite frankly, I would never, I would never really consider the fact that, or I thought of the fact, years ago, that this situation could be even existing. But it is. And, obviously we can't buck this, nor can we fight it. We look at the NASDAQ composite, it's roughly 700 points above the upper band. So we look at this, it's about a 10% above the upper band. Dow's, about 10% above the upper band. S&P is really the smallest differential above the upper band. So markets, again, exuding incredible strength. Now here's gold. Gold's been in this real sideways trading action for a couple of years now. It made that tremendous run above the upper band, and now we've got into a kind of a time correction here. So it just continues to waffle between the upper and lower channel. So again, at some point this will break. I don't know at this point which way, and quite frankly, I'm not biased for a move in either direction. At this point, I would just look to see where the breakout, which direction it breaks, and at that point, probably just go with it. And then here's copper. I haven't shown copper in a while, but I wanted to bring copper back into the fold because, again, last time I showed this, we were talking about how copper was literally sitting on the mid-band here. And it tested the mid-band for half a year, maybe 3/4 of a year. And then what happened was very simply this. We had, the Chaikin money flow flip positive. The MACD down here flip positive. And now copper has moved up nicely. So it's moved up from about the $2 level to $1 to right now, as of yesterday, was $3.20. So it moved up about $1.20 on $2, which is a really nice move. Now here's oil. Okay, oil is interesting because again, we had been looking at this particular monthly chart, and there were a couple of things that were positively happening with oil. All right, the first of it was, okay, can oil get through that mid-band? Mid-band is 55.85. So you can see we bounced off it a number of times. Let's see if we can take this. Bounced off it there, basically there, bounced off it there. And now we've just slightly cleared it. And as of yesterday, it closed at 58.09. The 200 EMA happens to be 61.82. The 50 is 58.95. So there's still some technical resistance overhead. And, what I'm kind of waiting to see is if, oil just breaks out of this particular pattern. On the positive side, money flow has flipped positive, okay? And it did it, well before this peak here, a retest of the mid-band. So that's why, I had been saying a while ago that My suspicion was it probably takes out the mid band. And then down here, we can see how the MACD had flipped positive. Now, the other interesting element right now is this. The D1 is getting very close to crossing above the minus D1. All right, so I think if this does start to trend and that flips positively, you know, I think you're going to see oil make a nice run. All right, then here's Apple, monthly chart of Apple. Apple's about $25 above the upper band. So again, just exuding tremendous strength. All right, now we scale down to the intraday charts. And this is where we really need to, just want to check something here, guys. Okay. This is where it pays to understand the levels and where we're at. So right now, the major level is 26.95.30. All right. We actually did close under 26.85.55 for 2 days. Now, with today's action, I believe we're back above that price level. So I think if the S&P recoups that level, it'll make another run back to the 26.95. As you can see here, it's gone basically 2 levels up. The next upside confirming line is 27.05. So that's the level above the 26.95. Right, now we scale down to the 30. And again, this is what I find particularly interesting. We look at this 60-minute chart. I'm going to get a pen here. Okay. And we can see that the 200 EMA is starting to spread from the 253. And it's starting to separate, moving up to the right. So again, that's exhibiting really strong market. So I think the first point I want to make about this is simply this. When you start to see that, don't think about shorting, okay? Think about where do you get long. And we scale down to a 30, we see again the same kind of pattern here. All right, 30's in an uptrend, nice separation between the 200 and the mid band. And if we look at this 30-minute chart, there are actually 2 areas that you could have possibly got long, right around that 26.25 level, and then I get a 26.52. So this has had some really nice swings just off this particular setup. And then likewise, here's the VIX. Now, the VIX had flipped into a downtrend, okay, on the 60. And, you know, the point I keep bringing up was, well, do I think that 938 gets taken out? Again, what's been interesting about this level is that every time it gets there, it just seems to bounce. Now, yesterday, it actually got under 938. However, it couldn't close under 938. So it bounced up, closed yesterday at 972. So again, we really have to respect this level until it's decisively broken. And what would be decisive? Well, I want to see a couple of closes underneath it. But clearly, the short-term momentum on the VIX is bearish, okay? The 30 is in the downtrend as well. And it just seems like every time it rallies, it stalls against resistance. And that's what I keep. Yeah, you're right. Andrew says we had a similar conversation when the VIX was having trouble breaking under 1250. Well, I think the real key on this right now with the 938 is that has been just a tremendous long-term support level for a long time. And we go back to if you go back to a weekly chart, you'll see. I mean, it just seems like every time that VIX gets to 938, it rallies. And, you know, and it rallies big. Now, the one thing, how do I say it? The one thing that I haven't seen yet, and until I'm proved, how do I say it? Until the VIX proves differently, every time that VIX rallies, I expect a sell-off against a higher resistance level. Okay. For example, 1016 we know is a resistance line. And look at it, sold right off it the other day. And it just seems like every time that happens, 1094 was a major line, never quite got above that. Here it did breach 1250, but it was overbought given the fact that it got above the upper band. And again, it came right back down. Where did it stop? Right at 938. So again, these little punches off the 938, or I should say the more important thing is to watch it sell off against a higher level of resistance. That helps to confirm the long entry in the market. But again, I keep writing about this and saying, is it possible the VIX could go lower? And my feeling is I think it's very possible. So it remains to be seen if that's going to happen. But I do believe that there's a very strong possibility that 938 gets taken out. And I think if it is taken out, it goes to 780. Okay, now here's the Qs. Qs is an uptrend on the 60-minute chart. You can see the next level up is 162.5. I do expect that to get hit, by the way. And ultimately, by the way, if I go back to the S&P, I think ultimately the level that the S&P could go to is like 2812. I think that that's ultimately the target for the S&P 500. And again, that's my prognostication right now. There is resistance above the 27 area. So it's going to be kind of interesting to see if ultimately we hit that level. And then at that level, if the market does start to correct. But right now, it's all systems go. Market is still in a bullish mode. All right. So anyway, back to the Qs, 156.25. And it took it out, by the way, over here. We had to pull back to just under the 153 level. And now we've basically moved back up to close just under 157.81. 2 closes above that. I expect we go to 162.5. And then here's the 30-minute. And this is kind of interesting because the 30 just crossed into an uptrend. And you can see that the 30 had been above the upper band. So, we do expect a retest of the upper band. I think that's highly likely here for the Qs. And then here's the TLT. Now, this has been really kind of an interesting trade the last few days. TLT came back up to the 128.13 level and just pretty much collapsed. And I was listening to CNBC the other day, and they said this was the largest spike in interest rates in I don't know, they defined it in a very long period of time. And it happened right against that 128.13 level, pretty much straight down. I would have expected 125 to hold, and it broke through that and broke under it yesterday. So now the TLT is back down to closing, actually closed yesterday under that 124.61 level. So I would expect if the TLT does close under that today, it's going lower, probably go down about 122. And then we look at the 30-minute, okay? It's kind of an interesting chart, okay, because you can see the TLT stalled right at the upper band, came back to just under the mid band, stalled again at the upper band, gap down below the mid band, and look at it. Yesterday, it was sitting right on the lower band, which tells us that it is oversold short term. and I would expect a bounce. But the key is going to be, can it close back above 124.61? So we'll see if that happens. And then here's the daily chart. I wanted to show this because the daily is still in an uptrend. But what's essentially happened is that the 128.13 level has been strong resistance. Okay, sold off it twice. You can see here this moved down, basically two levels back. So next level to the downside was 123.44. And here's the GDX. Okay, GDX. Take a look here. Okay, GDX in a downtrend on the 60. Okay, 22.66 right now to me should be resistance. Yesterday it closed at 22.50. So I want to see if this holds as resistance today, because essentially that's a two-level move to the upside. All right, and if the instrument's bearish, typically it doesn't go long more than two levels. And what's interesting here is that pivot low was a penny above our support line, right at the lower band. So again, kind of a low risk entry, by the way, if you took the long here and traded it up for the two-level move. So it'll be interesting today. We'll look at the GDX after I close down the PowerPoint. But here's the 30. 30 is still in a downtrend. Okay, 22.66 to me should be resistance. And then here's Apple. Okay, Apple held support at the 168.75, ran up and took out 175. I really thought that 175 would hold the support. It closed just under that yesterday. So again, Apple's going to be an interesting thing. We can look at that too. The disturbing thing for Apple right now is that the 60 has crossed into a downtrend. But the 30 just crossed into an uptrend. All right, so we've got a bit of a divergence going on here right now with Apple in the short term. I thought 175 was ultimately the objective for Apple, and Apple's hit. So, it's kind of right there. And then here's an interesting market, the XLE. Okay, the XLE, it's interesting. It came back, took out the 68.75, and then bounced off that level for a number of days, 4 or 5 days. And of course, now it's moved up to what I thought was the objective, 70.31. Took it out yesterday by 2 cents. So Apple clears 70.31. The next level up is that roughly the 72 level. And then we look at the 30. The 30 had crossed up back on December 5th. So short-term momentum had moved into the XLE, okay? And, at that point, the logic was to continue to stay on the long side. All right, that's what I wanted to cover on the PowerPoint. As I said, it was going to be fairly quick today, just kind of closing, reviewing the instruments we typically look at. If there's any questions on the PowerPoint, I'll leave it open. If not, then I'm going to close it down, and then we'll look at some of these instruments live. All right, good. I don't see any questions. Oh, there we go. Okay. Let me just set this up. All right. All right, let's take a look here. The one I really wanted to look at was the GDX. Okay, so the GDX right now is 22.73. We were looking for 22.66 to be a resistance level. So now again, this is going to be very interesting to see if GDX can close above that today, or if it consequently fails here. So it's close enough. It's within 8 cents right now of the price. that, to me, at this point, you don't make a decision. Okay. You look at it, monitor it, and see what the next step is. Okay. Either it's going to close above it or it's going to pivot down and reverse and close under it. And then likewise, okay, the TLT is starting to bounce. It's at 124.58. And I believe the number was 124.61. Let's take a look here. Next to TLT. There it is. 124.61. Okay. So now the TLT is within 3 cents of that downside confirming line. So now the implication here is simply this. If the TLT closes under that 124.61 today, then it should drop to the next level, which would be roughly 122. If it retains that level and can close above it, then I expect it to continue up. Probably retest the mid-band here. Apple. All right, so Apple did bounce. It is back above the 175 level. And again, do I have... All right, 175. So the next upside level, I'll tell you right now, is going to be 175.78. All right. So right now we're within 28. We're within 20 cents of the next upside confirming line. And again, the implication of that is if Apple can close above that for 2 days, then I would expect to move up to roughly 178 and change. Let's take a look at some of these companies that reported. I really didn't get a chance to look at any of them today. But here's CAG. All right. So CAG gapped up and gave back its gains. Paychex. All right, gap down. Not really a stupendous move at all. In fact, this week we really haven't had any huge moves at all. I mean, here's ACN, gapped up, all right, up, it's up less than 3%. Kind of an interesting setup because you've got negative money flow here on a gap above the upper band, which tells you that most likely a short here would be warranted. The other one is KMX. All right, well, this is still a 4% move. Again, not a stupendous move here. So we're not getting, the 10, 12% moves that we like. Even DRI the other day was up 6.79%. This is kind of an interesting setup. We closed above the high of the gap bar, and it ran up about $4. So we had kind of a continuation trade there. RHT. All right, RHT gap down. That was down about 5%. Not really, again, a stupendous move. You look at the 60 on Red Hat. All right, still bearish money flow. So chances are this thing's probably going to go lower. Let's take a look here. Yeah, it's interesting because The earnings gap, yes, typically that volume, you're going to get that volume spike on the first bar. And then the question is there going to be follow through? So, for example, if we look at Red Hat here, what's interesting is the second bar closed below the low of the first, which tells us that most likely resistance should be probably somewhere in the midpoint of that bar. If I look at that bar, if I take the midpoint's 123.85. So it didn't quite get back to the midpoint. But the key here is going to be, let me take a look here at something. I want to put up a 10-minute chart. I want to see if the 10 is pull. Okay, so the 10 is in a downtrend. Okay, took out the lower band. Now it's overbought. We're overbought right now on Red Hat. So this is kind of an interesting setup because to me, this stock, ideally, it would be nice if this came right back to the midpoint of that first bar, which is about, it's 123. It's about 80 cents higher. But to me right now, I mean, there's one or two ways to look at this. You could just sit and wait until the negative D1 crosses, okay, or the MACD crosses below zero. And the MACD is slightly positive, hasn't flipped negative yet. But what's happening here is this is like, it's starting to spread apart. It's showing weakness. It hasn't been able to rally above the high of the gap bar. So, I mean, this is one that you'd want to look at and say, okay, let's see if it breaks for another run down. And the run could be, let's take a look here. I don't know if this has weeklies. 125, okay, 125.60 to 120. So it's about a $5 potential swing, which isn't bad. Take a look. I wonder if this has weeklies. We'll find out. Okay, it does. So let's go to next week and price it out just to, oh, wow, and it's got dollar increments. So the 123 for next week, they're quoting $1.25, $1.40. So you probably could pick those up for $1.30 with a potential of a $5 move. So $1.30 could potentially go to $5. Now I'm gonna have to watch this. Andrew, I'll be watching that today, by the way, now that we're looking at it. But this really, even with this drop, it's not a stupendous move. There it is. $122.39 is the 50 EMA. What's kind of interesting about this is the next level of support is down to 106 on the daily. Kind of interesting. Now I'm kind of excited about Red Hat. Look at that. With, since we've looked at this, the histogram has dropped from like 0.04 to 0.004. So it's very close to turning bearish. Interesting. But, I think the first point here on this is simply this. When you see that bearish gap, second bar closed below the low of the first bar, your first inclination is short. And I don't think you want to think about trading the bounce, though you could if you were nimble. I mean, you got the little bounce here. I mean, because really, if you're going to trade this bounce, that's when the first time you would have considered, which was basically in here. So let's see. That price is 121. It bounced about $2. But it's a counter trend trade, so you'd be in and out of this thing pretty quickly. There's a lot of slop there. Interesting. All right, that's one to keep an eye on for today. Let's see here. Well, we talked about Darden. Darden was the opposite. Had the gap up, continued up, and now it's starting to kind of trade sideways. So this might have one or two more days where it kind of just flatlines. Oh, FedEx reported too this week. They didn't have a huge move. They gapped up, and it's just kind of churned since then. There it is, the gap above the upper band. Did finally close underneath the low of the gap bar. Got above it again, and now it's kind of sold off. This you'd have to scale down to probably even a shorter time frame to catch that. Put up a 3-minute. All right, there's the 3-minute. I guess, if you were nimble and you went down to a 3, you could have caught that second move above the upper band on the 10. Well, hit a high at 255 down to 1%. That's about a $6 drop. Not bad. Let's see here, 255. All right, so today's range was a low of 145 to a high of 570 on the 255 put. So that's not a bad trade. Oh yeah, they got slammed, Andrew. I don't know if you saw that. Check out that move on CMG. Apparently, they had an announcement come out that, I don't know, some sort of food poisoning in a restaurant out in LA. But it's really kind of interesting because, if you look at this chart, and I hadn't looked at this in a while, but notice how the money flow had been completely negative here on this 30-minute chart. And then it finally cracked on the announcement. and it's down, I don't know, 15, maybe $26, $25 in 2 days off that announcement. And quite frankly, if you looked at this chart with the money flow being negative, I would have been not, how do I say it? I would not have been inclined to be thinking long on this. It's tough to see it here, but the 10 was in a downtrend too. And it's interesting. It just kind of sold off right against the mid band. And now, obviously, well below the lower band. But kind of getting oversold. So I would think if this thing rallies up and gets a bounce, it would probably be a good shot taking a short on this. To see if this thing was going to break. But yeah, this was, let's look at the 60. There's the 60. And again, interesting, the 60 had negative money flow as well. So, it's really interesting to me how you see all this negative money flow before this announcement is made. And it's almost like somebody knew that it was going to be coming out with this type of an announcement. I'm not saying they plant this, but I mean, it's crazy to me. It's really crazy how, the plug was already being pulled on CMG, before this announcement. I guess the other way to look at it is, I wonder if somebody's out there planning some sort of like bad lettuce and somebody gets sick. Here's the daily. Clearly, shorting this is the way to go right now. Yeah, I wouldn't be surprised. I mean, what's really bizarre is you look at these charts, and to me, it looks like, people were already distributing shares or getting short. And then they come out with these announcements, and boom, here's a $25 drop in 2 days. Now, just for grins, roughly 330. All right, let's look at the 310 put. Just for grins. All right. So the other day, okay, holy shit, is that right? These things were 95 cents? Holy Christmas. 95 cents. Right now they're showing a $2 bid-ask spread, but still, you can probably sell these things for $17.80. Unbelievable. Unbelievable. That's $1.30. They dipped to below $1 instantaneously there. But let's say they were still $1.25. I mean, so they went from $1.25 to roughly 17.50 in 2 days. And honestly, if you look at these 60, these intraday charts between the 60 and the 30, even though the 60 was an uptrend, okay, 30 was an uptrend, the 10 had already crossed down. So the even shorter term momentum was bearish. But what's interesting about this is that all three time frames has negative money flow prior to this news announcement. Unbelievable. Unbelievable. Yeah, definitely. Yeah, there's your overbought on the 10, right below the midband. And what's really sick about this is literally the midband on the 10 could have been your stop. So, if you saw it close above that midband, you pull off your puts, and you probably didn't really cost you anything or very little. And then it finally broke, took about a day, and then bam, she got whacked. Well, I guess I really have to start looking at CMG and following it, other than a Friday. Unbelievable. Even if you paid $1.25, it was still well worth it. Incredible. The question here is when it broke below the lower band here, would you have pulled off your profit yesterday? That's the question. Yeah, Andrew said I would have. Honestly, I probably would have too. But what's kind of interesting about this is the fact that it never really came kind of close yesterday to recouping the lower band. So I don't know, lesson learned here. I mean, say you had a 10 lot, yeah, you could have certainly pulled off 5 and let the other 5 run and see what happened today. But because you can see now, it's starting to get very close to the lower band. Unbelievable. Unbelievable. Bitcoin. I can't help but think that this Bitcoin thing is going to leave a lot of sad people in the wake. But look at this stock. This has something to do with the blockchain, this Riot blockchain. This stock was under $14 a couple of weeks ago and ran all the way up to $46. I mean, I just find it shocking how anything related with Bitcoin is just kind of going through the roof. And here's a stock, quite frankly, that I was looking at this morning. If I bought in here, on that spike above there, I would have been gone. And look at that. It ran another $13 higher. Now look at the poor schmuck who bought up here at 45. Now it's down to 30. So you're down, 15? You're down a third in a couple of days. I mean, again, that's the beauty of these bands. We know, it's probably not a good idea to initiate a long above those upper bands. Exiting your longs is probably a better idea. But I was stunned that this thing made this kind of a move in such a short period of time. Now they have futures on Bitcoin. I wonder how that trading instrument is. Yeah. Because I don't know how they can actually execute. I was reading something the other day that the big problem right now is if people are trying to unload Bitcoin, it can take 20, 25 minutes to execute a trade. which to me is not a very good indication. It's not like going into a stock or an option and, you hit the button on your broker and you're in or you're out. Yeah, I agree. But that's the beauty of these bands. And that's what where these bands to me are very, very instrumental. I mean, like I said, if you went in here and bought this stock down here on the oversold condition, okay, and just traded it, and boom, it breaks up through the upper band. Now you see that 1 bar stall. Goodbye, time to go. If you didn't close there, I probably would have been out here too, where it stalled, which is about the same price level. Now the other thing is, and it's funny because one of the things that's kind of interesting about this stock is that this thing never came up on any of my scans because I only scan for stocks that have options. Okay. And what's kind of interesting is I ran a scan, I was back testing something, and this stock came up. And again, I use an optionable scan. So I want every stock to have options associated with it. And now Riot does. They must have added options probably not too long ago. So if you look at this is like 46 up here. Jesus, and they even have weeklies. So that was quick. So if you look at the 45 put on the 19th, I want to see. Okay, on the 19th, oh my God. These things still were like $8.50 for those puts. Wow, are they overpriced? I was going to say, if they were cheap enough, when it got above the upper band, buying put protection would have been a nice idea. But they're so darn expensive that, honestly, you would have been just better off closing. Unbelievable. All right, let me just see. Oh, boy, I can't believe how long we've gone here. Any questions? My voice is starting to go here. See what that unit's doing. All right, it's up now. All right. Well, look, I think I'm going to wish everybody a fond farewell and a very, very Merry Christmas and close down for today. And as I said, we'll reconvene again after the new year. But listen, have a wonderful holiday, and I want to wish you and your family a wonderful holiday. And thanks again for being here. Have a great day.